continue. All right, so fast track presentation to the Board of Trustees, a presentation by Becky Williams, Jessica Alderson, and Antonio Starks. Our slogan is, "We are in the fast track to your experiences." Our promise, our mission statement. At Fast Track, we strive to be an innovation staple of the world. We want to capture the experiences of every moment in your life, one pixel at a time and one frame at a time. We want to bring about the future in technology while working to better our world for each generation to come. We care about fun and sustainability with every camera and drone we create. Our vision, we want to be in the hands of all your future adventures and hope to be a staple in your world of exploration and exciting milestones. We hope to cater to all the generations in your family as we continue our legacy for decades to come. We are ethical, sustainable, lead with integrity. We are innovative, customer-focused, and transparent.
Here at Fast Track, our production strategy was to start off slow and steady to win the race. Unfortunately, we realized quickly that we needed to adjust to demand. So one of our first issues that we found was that we were producing, but we weren't meeting the demand of our customers. So exchange rates affected our company. So one of the first big moves we made in investments in the facility was to build workstations. For a year, sorry, I can't see it because of the, there we go. Because of the little pictures, I can't see my slide. The workstations in year 7, we started with 280 and 110 for drone. And then in year 15, we were at 360 and 170 for drone. Notable to that is that we made a big increase in the first couple of years. And then after that, our sales decreased, so our need for more workstations decreased. So looking at our workforce strategy, we all along wanted to be above average in salary. We had good benefits. We provided more than average best practice and improvement training costs. Like, we invested a lot of money in that. Year 9 for camera was, when we look at the numbers, we see where we start to run into some issues and where we were at our high and where we kind of struggled after that. So year 9 in camera, we had 960 workers employed, but year 14, we only had 237. Again, this is something we knew that we were struggling with. We just didn't know exactly how to fix it. If you look for camera at year 9, we were paying plus 2% in wages. We went really far up, I think almost to plus 6% in year 12. And then in year 14, we tried to back off because we were reading the competitive advantage reports and saw that we were really overpaying. And that was essentially with every single element for our workforce strategy for camera. With drones, we started off with 564 workers being employed in year 9. And then we reduced down, or we lost workers in year 14, where we ended up at 484 people employed. Same thing. So like, we started off very average, plus 2% for wages for them. And then we got up to 7.5% in year, I think 12, and we reduced it back down to 6%. Again, it was just really paying attention to those competitive advantage reports and seeing that, you know, when we're not seeing the sales, we can't pay people money we don't have. So we had to make a lot of adjustments with that. And in all honesty, if you look at our next slide, it's going to show, like, each year we spent pretty much every decision round just really trying to fix things that we could identify as being an issue. So when we look at our summary of operating performance, we did really well with our PQ ratings for both camera and drone. For our compensation, for camera, we stayed consistent as far as being benchmarked to the other companies, but for drone, we paid high, and then we were actually paying less. For productivity, You can see that for camera, we were pretty consistently growing, but for drone, for the costs that we were spending, we were not consistently growing. In fact, in year 5, we had 1,500, and then we ended out year 14, at least what I can see through here, year 15, with 1,400 as well. So labor costs were consistently expensive for drone, but with camera, we kind of backed off and tried to be more competitive early on. So like year 8 is when we started making proper adjustments to that. The marketing costs, we were all over the place with our marketing costs. We, at first, I felt like weren't really putting enough attention on it. And then we saw that in the competitive reports, the amount that other teams were spending on their marketing costs, and we went absolutely crazy in year 10, which made our overall year look really good. Like our profit margins look great, but all that was basically a false sense of security, because you see after year 10, it just continually declined. And year 10 was our best operating year. Our direct competitors, pretty much this whole game, was 8th place. So the people that were above us was Early Morning Sunrise. And the action items we have in a place to outcompete them in the future would be to increase sales. We have to figure out why we're not selling product, increase marketing, reduce price per unit. So really narrow down what our product line is going to be and stick with that rather than bouncing all over the place to be competitive. Have 0 stock out, so make sure that we're keeping control over exchange rates so that we don't not meet demand because we don't have the product built. And then invest in the facilities. I think that we definitely had room to grow, and I kind of questioned, and I hope that at some point this will be answered, whether if we had invested in these facilities more, could we have sold more product? I don't know if that rationale is right or not. The team that we were consistently in front of was Halo. So they stayed 10th place. We finished in 9th place, and we held there pretty much. I think the closest we got was 7th place in year 12. The action items we had would be to increase marketing, increase our sales, have the 0 stock outs, making sure we're keeping an eye on the exchange rates and investing in facilities. So essentially everything would be the same. However, to stay competitive to Early Morning Sunrise's cost of their product, we would have to reduce our price. But with Halo, our product was actually cheaper than what theirs was. Lessons learned. Apologize that these slides are kind of out of order from what we bulleted on the rubric, but break-even analysis at the beginning. So with this annual report, I did a break-even analysis, and what it indicated to me is that where we were operating at, we weren't going to break even within this time period. It would have been awesome to have seen that in like week 1 or 2 when we were kind of coming up with what we wanted it to look like. And I thought that that would have been an awesome tool to have from the begin with, because even if you're just playing with numbers, you're going to have somewhat of a picture, right? I understand that you're competing with other people, but I would have said, okay, you know what you're doing just does not add up on paper. So I thought the break-even analysis was pretty telling. Maintain our overall business strategy throughout the simulation. So don't be so intimidated by the competition. Don't jump up and down. You know, I think if we had just had a plan and stuck to it, right, wrong, or indifferent, at the end of the day, we still finished second to last. Invest. So building out the facilities. We ended with a really nice looking debt to income ratio. But then we don't have a lot to show for that as far as our facility goes. We didn't spend a lot of money, but we didn't build out at all. A consistent marketing strategy. So we tried some tactics that helped short term, but long term, we really didn't see the payoff from that. So I think if we had another chance, or if we were going to give advice, it would be to stay consistent just overall with your strategy for marketing, for facilities, for operations. And then team collaboration, just ensuring that, you know, everybody is on the same page at all times. Everybody's putting their 2 cents in and understanding that, you know, my strengths are Antonio's weaknesses and vice versa. So I think the team part is really important.
All right, our strategic vision. So I was thinking about this today, and so I kind of went with kind of the standard, kind of catchy vision, but our strategic vision is basically to bring value to the customer and maintain our standard in both drone and camera, as well as putting our name out there and really getting a good profit margin and market share. I think we were kind of lacking on that. Not at first with the market share, but um, as the time went on and we were focusing on other things, we kind of took a little dive there. But yeah, that's basically it. Just value our customers and making making a good product. Our competitive strategy for cameras. So we started off as a low cost strategy. We have pretty low costs, kind of actually pretty competitive with what we were seeing on our industry average. We started talking in the second to third week and we changed to a best cost strategy and started uh, raising the prices a little bit more. And we continued to change strategies through the semester. And I think that's where we went wrong, because as we were changing random things and trying to strategize every week we got together, and we kept ending up in a new strategy. So other things were falling short while other things were um, gaining numbers. So I thought also that we did look at the journals and it did help us, but we did lose sight of a clear strategy. We had way too high of prices by the end. We ended up having like $800 for one camera in North America. And then, which we can charge, we noticed we could charge more in North America versus like Latin America or Asia. Europe, you could charge a little more too. But overall, it just didn't balance itself out. So there's that. We did not know a good strategy for Latin America. Everything we tried to do there, it just didn't work. I mean, we had kind of a profit margin from there, but not really. It was the lowest, always the lowest. It like it just felt like we were losing money every year in Latin America, and we didn't know how to fix it. We weren't educated in exchange rates, so I had never really studied exchange rates. I mean, a little bit in business finance, but I didn't know how to implement that into our strategy or into our uh, business at all. Actually, we did mess with the discounts and warranty periods as well, but they did actually help us. So, like, I think we went to 20% all across the board, and then changed the drone discounts and warranty periods, and it actually did help us. So that's good. For the future, I think we would probably bring it back to a best cost strategy or a low cost strategy. Definitely lower prices. I don't know. We went a little off the deep end, but I think by the end we were making a little bit more money than we were the past like 5 years or whatever. But um, I think we need to definitely up our marketing budget, because I noticed it was staying very low constantly throughout the semester. Um, I think we would have benefited from giving more money to our online sales, especially because nowadays it's all online. We definitely needed to find a definite strategy for Latin America, because obviously it just felt like we ran out of time. We didn't have enough, we didn't have any more time to focus on it. Uh, Utilize exchange rates, definitely learn more about the exchange rates, where to find them in Glo-Bus, kind of balance everything out. Um, I would have kept the warranty periods probably the same as what we did in year 15, because they seem to be working good for us. Keep enhancing our products and keep up to date with industry average. We usually always did that. We look at and see what every other company was doing that year or the year before, sorry, and see how we could kind of match it or kind of do as good as them, but still we didn't have a clear strategy. But I feel like we would have gone back to a clear strategy and bumped up a little bit. So competitive strategy for drones. To me, it seemed like the drone segment did really well, like way better than our camera segment. So we were a best cost strategy. We were very competitive priced. We didn't, I think one time I played with the price and I did like 5,000 for the drone. I'm like, okay, that's not going to work. But we brought it to the sweet spot where I think it was like 1,200 or 2,200, whatever. It really, it, it, it did well for us. We had good profit margins. We did go down a little bit in market market share, but I think overall that we were the best in drones. Like I think we would have done well if we could have just sold drones. So we did raise our price a little bit in year 15, and then we did keep the marketing budget pretty much the same, adding here or there, but then bringing it back in a little bit here or there. So also we changed warranty periods and discounts like once or twice, and that really did help us. For the future, I think we continue to stay the same with the best cost strategy. It worked for us. We did sell a good amount of drones. Um, I would definitely keep our warranty periods, discounts the same. Definitely up our marketing budget, like I said, in cameras. We are just really low on it. I think if they had, like, to me, if we give them money, they have resources to put us out there and show us off to the world and maybe get more customers. Um, I would thought maybe we could add more models to the drones. We had maybe 3 or 4 models of the cameras, and I think that maybe since everyone likes our drones, we could add some more models and enhance our product. Exchange rates again. I need to learn about that. I think it would have really helped us. Maybe that's the reason we weren't doing well in places like Latin America and Asia, because of the exchange rates. And then keep up to date with industry average. We always did that every week. So, all right. Sorry, that was long. All right.
Okay, financial information. We're going to start with the net revenue. As Jessica said, our drones outsold the camera. It started a little close at first, but it took off from there. We never could get the camera back up to succeed with the drone to succeed with the camera. But we started out, our net revenue was started at 334,128, and by year 15 we grew to $527,995. For the earnings per share, we started at 75 cents and we were able to grow that to $7.14 by year 15. And then the return on equity, we grew 2.1%. We started at 14.0 and we ended at 16.1. Our stock price, we grew that as well. We started in year 5 at $12. We were able to grow that to $77.34. Our image rating was, out of all the charts, was the only thing that we could not seem to keep up on or get to grow. We started at a 70%. We ended with a 58. Our credit rating, once we start paying the loans back, and our debt, like I mentioned before, our debt equity was so low that we were able to grow our credit score from a B to a A+ in year 11, and we maintained that through year 15, through the end of the year. Right. Some of the projections for our stock price, we ended at, like I said, 77.1 or $77.34. We were projected to hit okay, just the stock price, we estimated that we could raise that within the next 2 years from roughly $85 a share to $90. Our earnings per share, we ended, like I said, with $7.14. We estimated, projected that we could grow that at roughly $9 to $10 within the next 2 years. Our return on equity, we ended with 16.1%. We projected we could definitely get that upwards of 20%. Our credit, like I mentioned, we were A+. We could maintain that because like we said, we had little to no debt at all. Like I said, the image rating was very low. And then just a countermeasure to that, we plan to gain on market share. As they mentioned, we had a hard time gaining in Latin America. So that was one of our key focuses, to gain in Latin America and then maintain the corporate censorship to try to bring up that image rating.
All right. These are just some fun things I created. Becky Williams, Jessica Alderson, Antonio Starks, 1-800-555-DRONE, Fast Track Industries at customerservice.com, and our website, www.fasttrackindustries.com. Thank you.